Well, it's very elaborately said. I think it's a good segue into my next question. And, up until the credit crisis of 2008-2009, the dollar's precarious slide in purchasing power had been somewhat subtle. But since that time, QE1, QE2, has redefined, I think, the Fed's role. Suddenly, it has the right to purchase toxic debt from major banks, such as Bank of America, practically without limit here, without a ceiling. In addition, the Fed is acting as a monetary atlas, buying up Treasury bonds in a desperate attempt to support the system. This seems to be a sleight of hand that even the Fed's founders may have never dreamed as possible. If this Fed Atlas shrugs its shoulder, will the entire house of cards collapse?
I think it's worse than that. I think even if the Atlas does not shrug, the house of cards will collapse and it'll crush Atlas under it as well. It's going to collapse. You cannot sustain this. This is a bubble of the worst kind. There's just no reason to anticipate that it won't collapse. The Atlas in this case is a big rubber balloon. There's nothing within that image of this Atlas that gives its real strength, except, and this of course is important, an exception, it has the power of government to force everyone to go along with its decrees or they go to prison. Well, that's pretty important power, but it's a power that does not come from itself. The Federal Reserve does not generate that power. It's only because it has been able to go into partnership with politicians and literally steal the prerogative of government. You see, the Federal Reserve Act really is nothing but a cartel agreement, but they call it an act of Congress instead. Congress passed it into law, and so now you and I have to go along with it. So that's the force and the real power of the Federal Reserve System. It's the power of government. So you can force people to go along with it, and that's exactly what they're doing. But does that mean that it can survive indefinitely because it's got the power to put people into prison? No, it just means that if we allow this thing to continue, it'll not only bring itself down, but it'll bring all of this with it.
It's quite apropos, especially in light of the fact that the income tax officially came into effect in the same year as the Federal Reserve Act. They seem to work in tandem, which I think is what you were alluding to. But I'd like to move on. The Fed has announced its plans to purchase $600 billion of debt in the second round of QE. Now that Pandora's box is open, I think it's going to require Promethean gifts to undo their handiwork. Will such a leader seize control of the monetary supply, such as Ron Paul, or will additional rounds of QE eventually result in hyperinflation?
Well, I think all the indicators today point that in the direction that things are going to continue pretty much as they have gone. They have continued to increase the money supply as the solution to all of these problems. That's the only trick they know. It's the only trick they know. And as long as we allow the Federal Reserve System to exist, that's the card it's going to play in this game. It knows no other. It has no other card to play. And I think it's important for the audience to know that when we say that the Fed purchases the toxic debt, what does that mean? Purchase something that is worthless. Well, they don't purchase it at all. They create the money out of nothing to swap for this toxic debt. In other words, they just create money out of thin air, and they acquire these toxic assets in exchange for this money which they give to the banks. In other words, put yourself in this situation. You're a person, you've made a bad loan. You and I, let's say, we form a bank, and we've made a bad loan. We've loaned $1 million to some guy that can't pay us back. Well, that's bad news for us, isn't it? Well, it is until the Fed comes along and creates money out of nothing and gives us the $1,000. And don't worry about it. We'll take over this loan. So we're happy. We got our $1,000 back plus a little interest, but the money was created out of nothing and flooded into the economy on top of the money that already is there. That pushes prices up, and so the $1,000 that arrived to buy this toxic debt is taken from all of the consumers in society through the force of inflation. So they didn't buy it. They just passed it on to the taxpayers.
Take a look at the smaller and regional banks. This used to be a country that defined itself, at least economically, by the strength of the local economies. And what essentially is happening is they're bailing out their friends while the local economies and the local banks go under. And this is precisely the scenario that occurred under J.P. Morgan about 120 years earlier. And it seems to be a vicious cycle, but I digress here. Let's move on. For 6 months, national home prices have declined, and according to Forbes.com, the Case-Shiller Index this week has officially crashed to a new recession low point, over 32% off the peak price level. So now, after 1 year of treading water, the government housing stimulus plans have officially backfired. How does the 75-year housing bubble and its subsequent demise tie into the Federal Reserve story?
Well, it gets a little complicated here, but perhaps needlessly so. We have to remember that the price of everything in the long term depends basically on the supply of money as compared to the supply of goods and services for which that money is bidding. So, in general, inflation, whether it's real estate or a stock market or bars of soap or gasoline or anything, in general, real estate is a function of the the inflation is a result of the expansion of the money supply at a rate faster than goods and services. Now, within that concept, there are certain sectors that move up and down more rapidly or somewhat independently of the others. There are two bubbles within the economy, two bubble cycles that expanded for the past couple of decades much faster than other prices. And one of them, of course, was real estate, and the other was the stock market. Both of those bubbles, the whole economy was bubbling, but those two little spots on top of the balloon seemed to bulge out even further, and that's because the easy credit of borrowing money, which didn't exist before. If it's easy to borrow money. If the guy lending it to you doesn't have it, all he has to do is just create it out of nothing. It's an endless supply of borrowing, and that's what's been going on. Well, if the lenders, which in most cases means the banks, are focusing on making loans easy and low interest rates in two particular fields, borrowing for stock market expansion or for buying real estate, well, then, that bubbles those two areas a lot greater than all the rest. Okay, everybody knows that. Those bubbles went much bigger than all the rest. Well, now we're reversing the process, and so as the whole balloon starts to go down, or even as the balloon continues to go up, the whole balloon, bubble sectors are coming down. And so we have this confusion. We say, well, prices are going up. In general, yeah, take a look at the grocery store. But what happened to real estate? What happened to the stock market? So those prices are coming down. Well, all right, so far that's good, but eventually that process hits an equilibrium. When the real estate market comes down to the point where it finally is in alignment with the rest of the economy, then that process will reverse and begin to expand again along with everything else in the economy as inflation sets in even more so. The big question is, what is that equilibrium point? At what time can we expect that the housing prices, real estate prices, will finally have moved down to the point where they're in alignment with everything else? I'm not able to answer that. I don't know that anybody can. I personally just feel that this 33% drop that you talked about is not far enough yet to catch up. I'm still looking for a substantial lowering of real estate prices in general, but at some point, then that will stop and real estate will go back up again, not because the values are going up, but because the value of the dollar is going down. So it gets a little complicated, but none of it is good news for consumers, whether they're buying real estate or groceries, it's all bad news for all of us.
I agree, and I think the Fed is counting on the real estate deflation, if you will, which is really a non sequitur, but let's say the real estate price decline, because as folks know, the housing is a major component of our inflation numbers, so as long as that goes down, well, it's sort of like the Wizard of Oz, don't look back here. Yes, prices are going to the moon for the everyday American at the grocery store. Massive inflation underway, but the housing market is helping the Fed and the government to mask that fact.